It's the oldest saying in the book, what goes up must come down. And in the volatile world of cryptocurrency, that's proving to be a brutal truth.
The narrative surrounding digital currencies has been changing over the years. Look at big players like Elon Musk, who advised investors not to buy crypto after the $2 trillion crash. Yet the question that has reverberated in the heart of everyone over the past few years: is crypto dead? Or are we merely witnessing a new chapter in its evolution? This is Money Matters. DigiCash was the first cryptocurrency project in 1990. It promised a whole new way of handling money, yet it never gained widespread adoption due to its fundamental flaws and lack of blockchain technology at the time. 2 decades later, in 2008, a new kind of digital money was developed: Bitcoin. It became a unique currency that nobody could control. And in 2017, something inspiring took place. The value of Bitcoin went through the roof. It reached nearly 20 grand. People started to notice this new kind of money and believe it might be the future. But there was something even more incredible hiding behind Bitcoin: blockchain. This was the engine that made digital money work, and most people didn't know much about it outside the world of technology. Tech titans like Elon Musk, Jack Dorsey, and Mark Andreessen weren't just intrigued, they saw it as the future and invested heavily in it, causing the value of cryptocurrencies to skyrocket. Amidst this, other cryptocurrencies also took shape. Ethereum, Dogecoin, Ripple, and Litecoin joined the party, each with its unique features and users. People from all walks of life bought in, especially during the pandemic when the financial system was flush with cash and day trading became a pastime. Only thing was, as the crypto world expanded, it became a roller coaster. Prices soared to the skies and then plunged into the abyss, leaving everyone guessing. Despite the uncertainty surrounding the cryptocurrency world, 2021 was a boom for many individuals. People made millions from their crypto investments. For instance, in November 2021, Bitcoin reached an incredible $60,000 for the first time. And in 2022, around 20% of adults in the United States invested in these cryptocurrencies. With its value reaching new heights, nobody expected what would happen next. In 2022, cryptocurrencies melted down in a perfect storm of fear and panic, wiping away $2 trillion of value. This was a huge mess in the crypto world, and it scared the people who invested their hard-earned money. They thought these crypto projects were safe, but literally everything went in the red. 2022 was the worst kind of reset button for cryptocurrencies. Bitcoin, the biggest player, dropped a massive 63% from its highest point in 2021. Ethereum fell 67% from its peak at $4,600 in 2021. Even Dogecoin lost 55% of its value. Experts and critics said this crash was bound to happen, almost like a storm brewing for a long time before hitting. Some people even compared it to the big financial crisis in 2008. And it didn't stop there. The crash also affected NFTs, which are essentially digital collectibles. Prices for popular NFTs dropped by more than half in August 2022. Popular NFTs like Bored Ape Yacht Club and CryptoPunks are almost worthless now. But what actually led to the crash? During the pandemic, lots of money went into digital investments. Even big banks like Northern Trust and Bank of America joined the party. Some people even borrowed money to buy digital coins. But when things started to look bad in the economy, many people got scared and left crypto, taking away large amounts of money in the market. The drop in digital currency is just one piece of the bigger puzzle. Other things like interest rates going up, high inflation, and problems caused by Russia's invasion of Ukraine made people nervous. This chain reaction of events began when life was getting back to normal in the United States after the pandemic. It hurt big companies' stock prices, like Zoom and Netflix, that were thriving during lockdowns. But the absolute chaos started when Terra USD, a digital coin that was supposed to be steady, crashed on May 9, 2022. People thought Terra USD was safe because it had support from big investment groups like Arrington Capital and Lightspeed Venture Partners. They put in millions of dollars to help digital projects that used Terra USD. Nevertheless, Terra USD didn't have real money or traditional value to back it up. Instead, it depended on computer rules that connected its value to another digital coin called Luna. And guess what? Luna lost almost all its value. This has a direct effect on crashing down Terra USD, as it lost more than 99% of its value almost overnight. And that's not all. At the same time, other parts of the crypto world got sour too. One of the busiest places for digital coins in the United States, called Coinbase, started losing its value. It was worth $100 billion when it went public in April 2021. But within 5 months, it started going downhill fast. Coinbase had to cut thousands of jobs, and even the CEO of Coinbase, Brian Armstrong, set expectations of tough times ahead. He wanted to make sure Coinbase didn't spend too much money and become more efficient. They had grown too fast during the bull market. While this was going on in the crypto sphere, the third hit took place. A big cryptocurrency hedge fund called 3 Arrows Capital had to sell everything because they lost a lot of money in June 2022. This made more people sell their digital currency as they were worried about other hedge funds. And then another company, Celsius, headed by entrepreneur Alex Mashinsky, followed suit on the same exact month in June 2022. Celsius, a company that lends digital money, said they were pausing client withdrawals, which is typically a sign of big issues for any financial institution. This made the crypto world go wild, and people started wondering if this was all spreading from Terra's UST coin crash. On July 13th, Celsius filed for bankruptcy. Celsius's digital currency, called USD Cell, fell really fast, collapsing 70% in 1 hour from a previous high of 49 cents to 15 cents. Then, the final hit: FTX. FTX, one of the world's biggest digital currency exchanges, had major problems come to light in November 2022. They filed for bankruptcy after they faced a liquidity crisis, as well as lawsuits for fraud committed by its leaders. This made everyone sell their digital coins because they were worried about all the other players in this space. Beyond this, there's been a trend of bullish signals, as the crypto market does tend to eventually recover its momentum. For example, the price of Bitcoin, which dropped a lot after the FTX collapse, went up again this year, in 2023, and experts are now predicting bullish signals for the future. But Elon Musk thinks otherwise. He said during a virtual chat with the Wall Street Journal that he wouldn't suggest anyone buy cryptocurrencies. Elon Musk used to talk a lot about cryptocurrencies, but he's been quiet about them since the big crypto craze in 2021. He did show a little support for a coin called Dogecoin and even wanted to help it become the Earth's currency. Right now, governments all around the world are trying to decide how to control digital currencies. Even with all these fluctuations, lots of big companies and banks are starting to invest in cryptocurrencies again. They're also offering digital money services to their customers. In May 2023, the total value of all cryptocurrencies reached over $1 trillion. But here's the fascinating part. It's not just about digital money. Even if the value of cryptocurrencies goes up and down, blockchain technology can actually change the way we do business. Technology consulting firm CB Insights has discovered how the blockchain can fundamentally change the banking system, voting procedures, academics, and supply chain management, along with many other unexplored areas. Financial experts in crypto say that by the time we reach 2030, blockchain technology could be worth a lot more than what it was in 2021. So crypto is not dead, despite the current market conditions. Bitcoin reached 35 grand this October before sliding back a little, and many analysts keep saying that 2024 is yet another bullish year for cryptocurrencies. Either way, the real value will most likely come from the underlying blockchain technology.